Hello, my name is Mike Florin, and I'm the owner of Low Cost Mortgage. Today's your weekly update for November 5th, 2025. All right, so the Fed dropped their rate last week, and rates did what they did last September. So we got September rate drop, October rate drop. Last year, it was September rate drop, December rate drop. Well, I want to show you something real quick, and I did this last week. We're going to do it again. We've got September and December of last year, and I've got those charts popped open right here. So you can see the lines. Rates shot up last September, shot up last December. This last September in 2025, they went up, stabilized, and came back down roughly 4 weeks later. This time, it went up a little bit and it flattened out completely. And this, again, this is the rate, this is the Fed reduction of their rate in October. So this just happened the other week, but rates shot up and then flattened out. Now, today they went up and we were waiting to post rates until the ISM data came out because ISM was going to be one of the main indicators of where the rates were going to go. So we waited. And of course, rates went up because of that. In fact, let's pop open a, let's go ahead and go with a, I don't know, several month chart. See how the rates came down? Fed decreased the rate, rates came up, leveled off, came back down again. By the way, when it came down, our government hit the fours. We cracked fours. I shot an email out to everybody, put it on Facebook just to let people know, hey, we just cracked fours with some discount money. And that, of course, is a good sign for rates moving in the future. But then Fed cut the rate again, rates went up, flattened out, but you can check out that chart right there. Now, let's talk ISM. The major data that came out today was ISM, and that's non-manufacturing business indices, if you will, right? So they take several pieces of what's happening with several different metrics. They compile it together and they come out with the ISM data. In essence, 50, if it's 50, everything is holding where it should be. If it's below 50, like 49, 48, 47, it's retracting. But if it's 51, 52, 53, then it's increasing. Okay. Now, ISM overall was like 52 or 53. I forget, it's written down back there, but it was above 50. It was expected to be 51 or 52, a little bit better, and it was better than what was expected. So of course rates went up today. Now inside of that list is, this is non-manufacturing. Again, it's non-manufacturing businesses, orders, deliveries, employment. By the way, orders, deliveries were up, employment was down, business activity and prices. So all of those were up except employment was a little bit down. But all of the other ones were above 50, like 57, 58, which showed really good positive movement. And of course, then ISM's higher, so rates go up. There is no jobs reports tomorrow. So typically on Thursdays, there's a jobs report that comes out. Well, government shutdown, no jobs reports. But there are going to be some that come out on Friday. So you can expect another bit of movement based on the private sector's job reports that are coming out on Friday. That'll be non-farm payrolls, things of that nature. So expect some movement up or down, most likely up, I would say, after that data comes out. But it just depends on what that data shows, okay? Again, more jobs, higher rates, less jobs, lower rates, okay? Let's talk interest rates for a minute. Now, you can go to lcmloans.com/rates, search your own interest rate, your own scenario. Now, the rates that are going to be on that website are rounded up a little bit. And the reason they're rounded up is I don't want somebody to see a deal they can't get. I don't want somebody to see something that might not be available. And I don't want our competition to see really where our rates are. So a lot of times, an eighth or so, sometimes a quarter or so lower than what that website shows. That's where the rates are going to be. Now, in your email, you're going to see that conventional is low sixes, par, and you're at high fives with some discount money. And that's, you know, a vanilla scenario, 760 FICO, 5% down, basic super vanilla. Again, go to lcmloans.com/rates. You can search your own scenario. Government, FHA, VA, solidly mid fives, and with some discount money, you're into the low five. Government though, FHA, VA, you can have a little bit lower credit and still get a pretty good deal on that. So credit score doesn't really affect the rates all that much, but it does a little bit, okay? Now, there's going to be some key things about what we've seen from the shutdown and how it's affecting lending, okay? Now, a lot of your outlets If the loan has been registered, as in you're under contract, you give it to any lender, us, somebody else, and they will register it with an investor, or they'll register it within their systems. If that registration was November 5th and beyond, there's now reserve requirements in place by Fannie, Freddie, and we're seeing it by some outlets for VA as well. It's 2 months of reserves needed for Fannie, Freddie, and we're seeing again those reserve requirements start to come into VA, and we haven't seen them in FHA yet. But Ginnie Mae is actually just chugging along, closing loans, no big deal. Fannie, Freddie, they've added that layer, reserve requirements, 2 months. There is one potential slowness that we're seeing with the IRS, and that is with transcripts. Now, typically when we close a loan, we're going to go get transcripts on a lot of borrowers, not every single one, but on a lot of them. So we go to the IRS with a form, 4506. We give that to the IRS. The IRS will then give us copies of tax transcripts. You go in, you close your loan, no big deal. Nobody's the wiser of what's happening. Now, the IRS is being really slow with tax transcripts, and we've had a few scenarios where the borrower can't get a loan until the IRS opens up again. A few, not very many. With that being said, if your borrower has access to their irs.gov website, their login to the IRS, they can pull their own transcripts. And we're able to use those transcripts to close the loan. Most other lenders are able to use those as well, okay? Rates are just a little higher than they were a few weeks ago, but they are still substantially lower than they've been over the last few years. So you realtors out there, when you've got buyers and they're looking, if you've had buyers that left because maybe rates were too high or something else, it might be time to bring them back in. Also, if you want a really good deal on your mortgage, if you want to save thousands, whether it be a low rate, save money in closing costs, or actually both of those, then you want to give us a call at Low Cost Mortgage. And yeah, we'll see how much money we can save you.